So you can spend 20 grand in PPC, not make any money. That's horrible. You can spend our average right now. Our February deal cost was insanely low. It was $1,800 per signed contract for PPC. That's probably about half what most of our competitors do in our market. But that's also because of just how we're able to monetize every lead every way we can, and how we like the in-person touches with these folks. You just have a conversation with a seller. You find out what do they want, what do they need, what do they think they need, because it's always different. They always think they need, I need $1 billion for my house. No, what do they actually need? Well, I need to not have this problem, and it's crazy. Absolutely. You make a ton of money doing that as an entry strategy. But the key to any negotiation is to just have a conversation with the seller. Find out, what's the deal.
Hi, everybody. Jose Luis Morales here. Welcome back to another episode of the Morales Group Show. Today, we have a very special guest. His name is TJ Kozan. He is a real estate investor, and today he is going to be talking to us about how to find flip houses and how to find fixer-upper homes by having multiple different marketing channels, meaning like one of the things that most people have challenges in is how do you find the deal? How do you go out and find fixer-upper properties or properties that you can buy below market value? Today, TJ is going to be explaining that to us. So welcome to the show, TJ. How are you?
Pretty good, Jose. Thanks so much for having me. I appreciate being on.
Of course. So for our viewers who don't know who TJ Kozan is, who is TJ? And tell me if I'm mispronouncing your last name. Who is
Perfect.
TJ and how did you get involved in this wonderful world of real estate investing?
Well, if you want to talk leads, you want to talk the backstory. It's been a while, man. I know you've been in real estate a while too. I got it in 2006. So my first deal was actually 112 units, apartment units out of town. I'm from San Diego originally. Only problem in 2006 was 2008 was right around the corner. So that was an exciting time for, I think, everyone that was in the market at the time. Long story short, ended up moving to Dallas about 9 years ago. And right now we run a relatively high volume, I guess, for us, real estate investment company. We focus mostly on single family. We've done apartments, we've done self-storage, we've done some other stuff in the past. But our really core focus is off-market, direct-to-seller marketing for distressed residential real estate. And then from that perspective, we really take it from from negotiation all the way to exit strategy. What are the core fundamentals of the deal itself, the seller's motivation, the seller's desires, the seller's needs, and then how do we optimize an exit strategy to fit with the seller to try to really, we like to say we try to close every closable deal possible. So that way we're really optimizing our lead cost and optimizing our exit strategy on the back end. So that's the short version.
I love it. So I think what I hear you saying is that you have all these different marketing channels that you use on how to attract leads. Once the lead comes, based on what the seller wants, you figure out what is the way to monetize that lead, whether it be a wholesale, whether it be a hotel, whether it be a creative finance type of deal, whether it's a BRRRR, just different types of ways of monetizing it. But the main thing is just obviously how to generate these leads. For our viewers, when you say high volume, what does that mean? Just
medium volume. I don't know. It depends. If you're in Southern California, it might mean something different than if you're in Iowa or something like that. For us, for me anyway, we have 32 deals on the board right now, and our average turnover ratio monthly is probably about 30%, more or less.
I love
Some of those deals, a flip will stay on the board upwards to 6 months. A wholesale obviously stays on the board as short as possible, hopefully only 2 or 3 weeks. So it just depends on the deal.
I love it. Now, for our viewers, you want to make sure to stay till the end because we're going to be going over about 10 different marketing channels that we utilize to obviously get deals. So like, let's say that you're a newer real estate investor and I wanted to get my first deal. What are some of the different things that I can do to get my first deal? Or what would maybe be the easiest marketing channel to get your first deal?
Dude, so what I like to say is every single channel works, and it really is so individualized to what the person's abilities, competencies, and times are. Because if you have, time and money and ability, man, sky's the limit. Blow it up and come and compete with me, no problem. If you only have maybe, one of those, maybe all you have is time, you're going to start with something simple, right? You're going to start with bandit signs. You're going to start with driving for dollars. And, we even do that. When we send our acquisition guys out to go look at a house, we like doing it in person because we find we have a higher conversion ratio and we're just able to buy better and make a better connection with the seller. We'll have them drive for dollars in the neighborhood and pick up a couple of leads. And we close, I wouldn't say a ton of deals, but we close deals that way. So people that maybe don't have, if you can afford gas money, you can afford Uber. If you're, if you're driving for Uber, maybe you just start pinning stuff, driving for dollars. And you skip trace the owners, you skip trace the owner's neighbors. call them, hey, your house looks like, have a nice conversation with them. I happen to notice, like I was driving the area, local real estate investor, thinking about buying in the area. Do you know anyone that might want to sell and just convert a deal that way? Super low cost, but super high time. And we still do it. We still do it. We still do the bandit sign thing a little bit different, and we still do the driving for dollar thing. On the completely opposite end of the spectrum, um, PPC leads. PPC leads are huge for us. Our lead cost is actually pretty reasonable for what we're doing, but we've been doing it a long time. But it's easy, like any of these marketing channels, it's easy to do any of these things wrong, spend a lot of money, and not like actually have a payout. So you can spend 20 grand in PPC, not make any money. That's horrible. You can spend our average right now. Our February deal cost was insanely low. It was $1,800 per signed contract for PPC. That's probably about half what most of our competitors do in our market. But that's also because of just how we're able to monetize every lead every way we can, and how we like the in-person touches with these folks.
I love it. I love it. So let's go over the driving for dollars really quick. We'll go over bandit signs, and then we'll go over PPC, and then we'll get into the rest of them. So
Absolutely.
driving for dollars, like what would somebody look for? And what does that even mean? Like driving for dollars for like maybe somebody who's kind of newer to this?
Am I allowed to cuss on your show?
Absolutely, man.
Okay. So you're driving around, right? Maybe if you're an Uber driver or you just happen to be driving around whatever these areas are, you're driving around and you see a house and you go, oh shit. So you see an oh shit house. And what does that mean? It means like you're looking at it like it stands out, right? It's something different. And sometimes you don't even know what it is. It's just like you can identify a flip in a neighborhood that's, got a lot of variation. Like, oh, that's a flip house. Why is it a flip house? Maybe the brick is painted the current like cool flip colors. Right now, I guess we were doing like Battleship Gray about 3 years ago. Now we're doing the more lighter colors with maybe a darker trim. Like, oh, that's a flip house. It's got cedar posts, no problem. That's a flip house. Well, that's got weeds up to here. It's got a trash can that's fallen over. It's got missing roof shingles. That's an oh shit house. Oh shit, what's wrong with that house? And then tag the house. I like old school. You want to tag it old school. Write it down. You want to save all the money? You don't need an app for that. You just write it down right there. You want to absolutely save money? Go on peoplesearch.com or something. I don't know. Like we pay for all that stuff, but just put it online, Google it, find out who owns the thing, and give them a call and just have a conversation like a person. Everyone thinks there's a super secret trick to like how to buy houses. How to buy distressed houses. You just have a conversation with a seller. You find out what do they want, what do they need, what do they think they need, because it's always different. They always think they need, oh, I need $1 billion for my house. No, what do they actually need? Well, I need to not have this problem property that's costing me landscaping that I'm not paying for. This would cost me taxes. That's whatever it is. Or I need to pay for something or whatever. They always have a fundamental need. Find out what that is. Find out how you can fix it, and then find out how you can merge an exit strategy with that. I would love to say that we could wholesale every single deal we get and make 25, 30K wholesale and just ramp that up. In this market, maybe 2 years ago, that may be feasible. In my opinion, in that market, that's kind of a low margin way to really scale up a business. We like really maximizing the exit strategy. It gives us way more flexibility when we're buying. It gives us more flexibility when we're talking to sellers in terms of what we're able to offer them. And then it also makes us more money on the back end with the deal too, because now we have fundamentally an asset that we have more options with. If we're just doing a single exit strategy like wholesaling, well, then we have to fit everything into a box, and that's tough to do.
Yeah, it basically, for our viewers that don't know what this is, wholesaling is just buying the property at a discount and selling it at a discount as well too. What he's referring to is just having different ways of structuring the deal to be able to capitalize on the deal in different ways, and I think that's great that you guys are doing that. And then for skip tracing, like skip tracing is basically looking up phone numbers or looking up the information for homeowners. If somebody did want to invest a little bit of money, how would they go about doing that? Let's say that they're driving for dollars. And would you ever knock on somebody's door, like if the house looks distressed, and just ask them, like, if you don't have a lot of money, would you consider selling the property?
Would I personally do it? No, because I've never done it. But so yeah, we have a private group too, and there's some guys in there that they build their entire business out of door knocking, pre-foreclosures. I mean, that's pretty low. That's pretty low barrier to entry, low skill. I mean, no offense to them, they're great people. They make a lot of money, but they just, hey, I was in the neighborhood, and have a conversation with a seller like a normal person, and it's crazy. Absolutely, absolutely, you make a ton of money doing that as a entry strategy. But the key to that, the key to any negotiation, is to just have a conversation with a seller. Find out, what's the deal. If someone's in pre-foreclosure, they're going to be a little apprehensive, a little standoffish. They know they're in a bad situation. They're getting mailed by every guy in town that wants to buy a pre-foreclosure list and send them a letter. they're getting called by everyone already. They're getting texted by all the people still doing texting. We don't do texting. It's never been something that I've actually enjoyed doing. But who they're going to connect with is the guy that comes up to their door, knocks on the door, and has a conversation. Now, you're going to get a lot of doors shut in your face. Well, yeah. But if you want to make money, sometimes you got to deal with rejection, and you got to learn how to overcome the objections too. So that's another, again, low cost, really easy way to enter the market is just door knock pre foreclosures, for sure.
I love it. I love it. Now, okay, what about bandit signs? Like how many of them do you put out? Like, what is that?
Yeah, so we actually use. So I mean, I don't know if littering is a good marketing channel to like really scale up because let's be honest, they're a little borderline. I know there's some guys that build their YouTube page on talking about how to do it. Out here, you put them out on Thursday, they might get picked up by Friday. You put them out on Friday, they're probably going to stay out till Monday. So I mean, that's good. Um, we actually do them a little bit different. So we sell a lot of our deals offering seller financing, where we create a note, we sell it to an end buyer, they give us a down payment, and then we basically have the loan. So it's like a sub two or a wrap. People are more probably familiar with that, but we're actually the bank, so we actually have the money, and then you know they bought the house and we offer the financing for them, and then we recapitalize that by either selling the note or selling a piece of the note and then collecting a cash spread. Now that's a long way of answering your question. The reason I do it that way is what Bandit Signs are doing well for us right now is finding those buyers. So we're generating an internal buyers list of direct to retail buyers for some of these really. They're still pretty nice houses, like relatively, but they're maybe not like fully fixed out, like decked out houses, but they're very livable and just very nice houses. So we put out bandit signs that say, I don't even know what they say. They're out there. Basically, they say house for sale with a cash down payment and a payment amount, something like that. And then lights up the phones. We'll get, I don't know, a couple hundred phone calls over the weekend. We'll qualify some buyers. We'll add them to the buyers list. If they end up buying the house in the area that we put the bandit signs in, that's awesome. Those houses tend to go pretty quick sometimes. And sometimes we'll have a buyer that was originally for this house. Maybe they go to a house over here that's 2 or 3 miles away, and they're still happy. So when we're doing that, we'll put out maybe we'll put out 100 signs. We'll put out 30 in English. We'll put out 30 in Spanish, and then we'll put out 30 we buy houses signs, and all the same handwriting, and just kind of get what comes in. So we'll close a couple deals on the acquisition side once in a while, but we use it really, really heavily as a dispo strategy doing our seller financing.
I love it. That's actually the first time I've ever heard about it on a dispo aspect of which is awesome because it's generating some leads. I love it. I love it. Cool. All right. So that's all we've already talked about too. We've talked about driving for dollars. We talked about having bandit signs. What about PPC leads? Like if somebody wanted to set up a PPC campaign, would they just do it themselves? Would they hire a company? Do they need a website? What do you think the best strategies for that would be?
Yeah, get a good referral for someone that's making it work for them. Because, like I said, I think I started out saying all these different strategies absolutely 100% work, and all of these strategies can potentially have a 100% failure rate if you do them wrong. And PPC, the more money you spend on something, the more potential there is for an error. It's going to cost you a lot of money. So I know people that try to get into PPC, they spend 8, 10, 20 grand, and they maybe make a 0.5 R. They maybe make half of that back because they're not doing it right. That being said, here's how you do it right. First, you get a good referral for a dude that's going to manage the PPC if you don't know how to do it yourself. Because do you want to be in the PPC management business? In which case, maybe you should just start an agency and sell that service. Or do you want to be in the real estate business? I remember, like, for example, here's a good anecdote. I remember asking Facebook for a eviction attorney because we had a squatter like a couple years ago. I put on Facebook. It's really active in the DFW market. Hey, I need a good eviction attorney. I got 3 sent to me. I actually already knew 2 of them. So whatever. But a lot of the comments were, dude, you can just do it yourself. Here's how you do it. Like, I know how to do it. I know how to put in my own granite or my own flooring, but I don't do it. Same thing with like something like PPC. I think so oftentimes in the marketplace, a lot of kind of operator guys want to just do everything themselves. And it's good to have an understanding of how to do that, but it's better, in my opinion, to hire the professionals that actually know how to do it. So we use a buddy of mine that I've known for years, and he's a great guy. He's who we use, and we're very joint in terms of like how to set up the campaign. Structurally, how to do it, you need a website. You can't go fishing without a net. So your website is the net that catches the stuff, and then you got to put stuff in there. So you put stuff in there by basically driving traffic to the website, and you do that by paying. We've tried Bing, I'll be honest, and I could never get Bing to monetize. We do it by giving Google a lot of money, and then Google sends us leads. So the main like high end philosophy on that is where does everyone go for their answers to everything? They go online. Like, hey, I need a new swimming suit. I need, I don't know what people do. I don't know. Whatever. I need to buy something. Oh, hey, I got a crappy house. I need to sell my house. I'm going to ask the internet for the solution to all my problems. Dear internet, I have a crappy house. How do I sell it? You're going to see our ad. It's going to pop up. You're going to click on it. That's the answer to the problems. You're going to have a nice prominent call to action on top of the website that says, well, you need to sell your house? Click here. We'll buy your house. I mean, it's that simple. They click there. And then from there, it's the race to the finish line. So 2 years ago, speed to lead, and I don't mean the company, they're good people too, but I mean getting to the lead quickly, responding quickly, and being the first one to get back to them is huge in terms of your conversion ratio, in terms of actually making that lead turn into a deal. I remember we had a lead come in. I haven't talked to a seller in probably a year and a half, but about 3 years, 2.5 years ago, one of the last leads I actually talked to, no one else was in the office. They were at a networking event. I was hanging out with my operations guy. It was hot. I think I was in a tank top and like gym shorts in the office. And a lead came in. No one else could take it because they were in the other part of town. So I talked to the guy, and I'm like, damn, I don't want to talk to this guy. I got guys for that, right? So I take the call, and we have a conversation. He says a bunch of stuff, and it's like, he sounds kind of urgent-ish. And he says two things that are really important. He says a price that made a lot of sense to me. He said he's trying to sell his mom's house. Well, all the siblings are in town. Mom's perfectly competent and aware, but she wants to help him out with the situation. And I've been trying to get this other guy to come out and look at it a couple of times. It's like, oh man, now I got to go see this house. So he said all those things right in line. In 45 minutes, I went from my office to my house. I literally had to put on pants and drove out to his house that he was trying to sell. Weird dude, right? He says, oh yeah, here's the house. Walk through it and take a look. Like, you want to show me the house? Not really. You know what you're looking at, right? Like, I mean, I guess I've seen houses before. So I walked through the house. It looks like grandma's house, like you'd expect. It was a nice little house. Go outside, have a conversation with the guy. I said, well, you gave me a price on the phone. Your mom wants $120K out of the place, cash in her pocket. Does she have a loan? No loan? Okay, cool. 120K works. And I just flat out said, like, so if you want to net that. I don't know what your taxes are. I don't know what your insurance escrow is. I don't know any of that stuff. Why don't I give you 125K? And why don't we do the deal? He says, you know what, if you can do that, I'll sign the paper right now. I said, well, as a matter of fact, I happen to have a contract in my car. I go out and get it. I go out, we sit down on the couch that I end up having to throw out because I tell them to leave all the crap they don't want in the house, and I'll take care of it for them. So we're sitting down, writing up the contract and all that stuff, and what do I hear? Right? I hear a knock on the door. It's that wholesaler that had been trying to get out there for 2 days and never bothered to make it, knocking on the door. He goes, excuse me, I'm going to go open the door. Opens the door. Says, hi, I'm here from so-and-so wholesaling company, blah, blah, blah. I was like, oh, I'm sorry, dude. I already sold the house to this guy. Wholesaler says, well, what if I can give you more? He says, I'm sorry. I already shook the man's hand, and I made a deal. If I was 10 minutes later, I would have lost out on $45,000 by not doing that deal. So I made $45K in 45 minutes, and we ended up wholetailing the house. We didn't do anything to it. We didn't renovate it. Took the trash out, cleaned it up, made it nice, put it back on the market, replaced the HVAC, did the foundation, and put in some new carpet. So we spent 15K. I mean, that's nothing for us, right? And then put it back on the market, made 45K in 45 days. So that was really key in the PPC space. And that's how you compete with that. That was a long answer.
It's awesome. No, I love it because we just started doing PPC, and believe it or not, so I've been a real estate agent for like 12 years. And most of the ways that we reach out to people is just by reaching out to them via the telephone. And it's generated tons of leads for us, but we just started doing the PPC. We literally have a lead right now that wants to sell at 775, and market value is probably like $1,150,000 basically. And she's like, yeah, that's all I want right there. I just want 775 for it. If you guys can close it out in 7 days, like that would solve all of our problems. So for the viewers that don't know what that is, it's basically, if you see those sponsored ads on Google, when you type in need to sell my home fast, those are the ads that start popping up, and people actually go on there and click on the websites, input their information, and get investors to go out there and make them an offer because you're solving a problem that they have, which I love that you guys are doing that. But that example is so true. So bandit signs, driving for dollars, pay per click. What about like cold calling? Like if you wanted to implement like a cold calling strategy, and this one revolves like, I almost feel like the pay per click would be easier. You're just receiving the lead. Through the cold calling, you might have to dig a lot more, and it might take a lot more time. But it may be less expensive than the pay per click as well too. So if I
Yeah,
wanted to
no,
set up a cold calling campaign, what would be the best way for me to do that?
yeah, I would say cold calling is probably right in the middle in terms of a good combination of like ease structurally in terms of how to do it, and then expense not being prohibitively expensive. I mean, all you really need to cold call, I guess, is a cell phone. Probably don't use your own because you don't want to get banned or you don't want to get like spam blocked or whatever. But it's a good combination, like right in the middle. Because PPC again, that's a perfect example. And I mentioned our contract price on PPC right now is in February I think was $1,800, so it's super cheap. But you can definitely spend 15, 20, 30K in PPC and not get a good return factor on that. Cold calling is, especially on a individual like starting off basis, great way to start. Start with a phone. Start with a dialer if you want to scale up. So use some kind of multi-line dialer so you can be calling a couple different lines at once, and then start with a list. And then the list is going to a certain extent, dictate the strategy for attacking the list. And not a lot of people talk about that. A lot of people talk about, well, hire a bunch of VAs and just call the crap out of every list that you can find, and eventually you're going to have some conversion ratio that works, and that's fine. But eventually, if you get to a decent size, A, you're calling the same list as everyone else, and B, you're going to run out of data. Even in a city the size of DFW, which is what, 6 or 7 million people, and we hit pretty much the entire North Texas region, you're going to be competing with people who literally own all the data that there is to call, and they just call it. So how are you going to stand apart from that and be better than that? Well, you're either going to compete on volume or you're going to compete on service level. And the way you compete on volume is by getting the VAs. And we have some VAs, and a lot of folks have VAs, and calling through the data, and then going through a filter process, and then a follow-up process. And some of the big guys in the cold call field will talk about maybe an 18-month cash conversion cycle between touch one, call one, and actually monetizing a lead on the back end. Do you want to work 18 months to get paid 20K? I don't know, maybe. Do you want to work, 8 days to get paid 20K? I prefer to work 8 days to get paid 20K personally. So now we're going to hit a higher quality of list. So now we're going to hit a pre-foreclosure list, and we're going to approach it differently because there's going to be a different motivation factor. So a broad-based, like everything encompassing list, maybe you're targeting a absentee landlord with high equity. So someone who's owned the house 5 years, 10 years, 20 years, or maybe an unknown number of years. That's going to be a broad list that's relatively unqualified. If I'm making cash flow and and I live 2 states away, but I'm collecting even $1,000 on a house that should rent for $1,800. In my mind, what's my motivation to sell? I don't know. So that's going to be a high touch, a high like process oriented thing. Versus if you're cold calling a pre foreclosure list, I don't exactly know the best way to approach the conversation, but hey, dude, you're going to lose your house in like a week and a half. Do you want to sell it to me and maybe not lose it, or do you want to like give it to the bank and lose it? Which one do you want to do? I mean, there's a little more nuance to it than that if you want to actually have it convert. But that's the gist of it. That's the conversation you're having. I would recommend probably not cold calling like a probate list. That's a little rude. I've never done that. If anyone has done that, I'd love to hear about it. I don't really know how that conversation goes. Hey, I'm sorry your grandma died. Do you want to sell me your house? Like, that's not great. So pick like one or the other. Pick like a broad, like volume-based business, or pick like a niche targeted list. So what we do is we'll hit fire damage lists. We'll get that data directly from the city. We'll do dirt and lots, so we'll do that because it's not as saturated and they're still pretty liquid. We can still sell them pretty well. We'll do pre-foreclosures, and what else will we do? We'll do code violations, water shutoffs, that kind of stuff. The data that's harder to get is more targeted. So right now, data has become a commodity in the marketplace with all the big data aggregators, with Batch, with PropStream, with even ListSource, which is a pain in the butt to use. Data is just a commodity. Everyone has relatively the same data because there's only so much to get. So the actual legit data comes directly from the county or directly from the municipality, and then it's going to be more up to date and it's going to be more specific to whatever it is you're looking for. So I would imagine there's going to be a lot of crossover between like a Batch and a ListSource list on high equity absentee landlords. Like, how many are there? I don't know, but maybe you want to dig a little bit deeper. Take a list like that you're cold calling and figure out who you can't skip trace, who's not popping up when you skip trace people. Like, hey, what are the unknown numbers? What are the numbers that you can't find? Well, those people are getting bypassed by all the big wholesale shops. They're probably getting bypassed by me because that's going to be more of a pain in the butt to find. And then do a deeper dive on those folks that you can't find. It's the same strategy as like a return mail campaign. If you're sending mail out, if you're sending out 20, 30,000 mailers and you get returned mail, well, the return mail is who other people aren't reaching because you don't know where they are. And if you don't know where they are, well, the guys are just mailing everyone, once a month or once every 6 weeks. They're still not mailing the guys that are getting returned. So try to find the people that no one else is finding, and then make a deal with them.
I love it. I love it. Cool. So, and for our viewers, like there's so many different lists or data pieces. You can do tax delinquency if somebody's behind on their property taxes. You can do reverse mortgages. If somebody has a reverse mortgage, you can call them. You can do people who have adjustable arms. You can do obituaries, people who have passed away. And I know that you said that you guys don't call probates. You can
Yeah,
do
it seems rude. I don't know. There's probably a good way to do it. I just don't know what it is.
garage sales. You can do garage sales as well too. Like if somebody's having, there's so many different lists that you can cold call, which is unbelievable. What I wanted to dig a little bit deeper is the fire damage list, the code violations, and the water shutoff. Are there lead providers that provide you with those? And if or let me ask it a different way. For the fire damage list, code violations, and water shutoff, how do you get those directly from the municipalities? Like who do you go to get these types of lists?
So it depends. The answer is it depends. So on the high level, there's not going to be a national list provider that I know of that has accurate data, because you want the dude's house that just burned down like a month ago. You don't want the guy that burned down 2 years ago, because that's already gotten rebuilt or bulldozed. So it's going to be, at least in Texas, in our markets, it's going to be municipality based. So each city is going to have on their website, they're going to have information. Some of them actually publish it on the website, like, hey, here's our fire report list. And then you just go through there, you download the data, you figure out like how much of it's residential, how much of it's commercial, how much of it's a grass fire in someone's front yard or something like that. And then it's just going to be so specific to the municipality. So, for example, we live in North Texas in DFW. Dallas is different than Plano, and Plano's a huge suburb that most people know about too. It's different than Fort Worth. It's different than Farmers Branch and Carrollton, which is right between Dallas and Plano. Farmers Branch and Carrollton, it's just on their website. You can download it right there on the website for free. Someplace like Dallas, to be honest, I'm not really sure. I got a girl that does all that. But structurally, you do if there's pushback from the city, then you do a Freedom of Information Act request, submit it to the city, they get back to you. Sometimes there's a fee, like a per line item fee or a per document fee or a per page fee. It just depends on the city, but they more or less got to give it to you. They don't have to give you a lot of private information, like the actual person's names, the privacy stuff, but they got to give you the address. And then from the address, well, now you've got the same as a driving for dollars list, except for you didn't have to go drive for it. So then you just dump it back into like a cold calling campaign, but it's going to be a lot more targeted than, call every absentee landlord in North Texas. Like, I don't have time for that. And if you're starting off, you probably don't have time for that either.
What about the water shutoff?
Oh, same thing. Same thing.
Yeah.
Yeah, same thing. You're gonna get more junk with that. So you're gonna get a bunch of people that forgot to pay their bills. It's gonna be a little bit of a trailing data too. I mean, let's be honest. You cannot pay your water bill for about 3 or 4 months before they actually shut it off. So it's not the best data, but it's gonna be a potentially distressed point on someone that you can call. And all of it's to a certain extent volume based. Even PPC, which is relatively, I would say, kind of reverse targeted, but the campaigns are targeted. There's still a volume component, so you're not going to convert, every phone call, but you're going to convert a certain percentage of that. And then the better you get at talking to people, the better you get at optimizing exit strategies for the people, the higher your conversion rate, gets, and the more money you make.
So essentially what I hear you saying is like, if you're going to do cold calling, instead of just getting like a list of everybody in the county, try to find people that are going through something, like either the house burned down, they have a pre-foreclosure, there's a tax lien, they have some sort of life event basically happening in their life that would potentially trigger them to want to sell the property, which is great for our viewers to know. So you mentioned to me off camera that a good portion of your guys' business now comes from like referrals, like either through wholesalers or realtors, or just people in the community. Like if maybe I didn't want to do the PPC, if I didn't want to do the bandit signs, if I didn't want to do the driving for dollars, or I didn't want to cold call, and I just wanted to build like a warm network of people that could potentially refer deals to me, how would I go about doing that?
Go out there, and so don't do it the way we do it. We throw the events, so we put on all the events. Don't start out that way. Maybe end up that way eventually after you've been doing it for a while. Go out there to every single event in town. Network with realtors. It sounds tacky, but post stuff on Facebook. Post that you're the guy that's doing real estate, and just become known. And it's amazing what can happen that way. I mentioned, and again, in our private group, I don't mean to bring it up for that, but we got guys in there that they build their entire business off of realtor referrals. People that are realtors that don't practice real estate except for maybe listing their own houses or an occasional friend and family thing. But we got people that are doing maybe 12, 15 deals a year just based on realtor referrals, going out to lunch with realtors. And what's the value proposition in that? Well, if you're a realtor, no offense to realtors, a lot of them are fantastic people, but generally they have a single exit strategy in mind, and that is put the property on the MLS and maximize the sales price on the property for the client because they think that inherently works in the best interest of the client. And for most clients, I mean, there's a reason the realtors are in business. For most clients, that is their best use of the property. But for folks that are inherited a property or maybe are embarrassed about the property, don't want a bunch of people walking through the property, as business guys, as realtors or whatever, we think, well, as much money as we can make is the best. So now we project that assumption on the other guy, on the seller. And if we do that, we're going to be leaving money on the table, but also we're not going to even be respecting what the seller actually wants out of the situation. So networking with realtors, building these relationships, you're going to be able to offer a solution to a seller where everyone's happy. You're going to be able to explain to them, well, here's why I can only afford to pay this much because here's the transactional cost, here's the renovation cost, and it's nothing against your house. It's a very nice house, but we both know it has some deferred maintenance. It's missing a ceiling. And now here's a solution that I can provide for you. And you can even be honest. Like you can very often, well, I wouldn't say you can even be. You need to be honest with sellers because they need to know that you're in the business to make money. But the way you make money is by providing a service to the seller that's outside of just maximizing the money they can make. If they're going to maximize their money by maybe hiring the contractor and doing it themselves, but if they don't have the 30 to 100 to 200K to dump into the house, how are they going to do that? So it's a huge benefit. Now on the wholesaler side, we do an education process with wholesalers because wholesalers is probably the lowest barrier to entry in the marketplace for someone that wants to work their butt off and make some good transactional income. But inherently, because of a low barrier to entry, it's going to have a lot of people that are fundamentally maybe not the best at doing the actual process, explaining the thing. So we'll mentor wholesalers and we'll work with them if they have a lead that they are having trouble converting, not necessarily even from the seller's perspective, maybe from a title perspective or an airship perspective or something else. Now we'll mentor that wholesaler and we'll work with them to work through the deal, and then we'll either close on it in house or we'll JV with them and help them dispose the thing on the back end and split the fee, however it's equitable between the wholesaler and us. And it's a great business model. It's just the more you can provide value at every step of the transactional process, and the more you can control multiple steps of the transactional process, the more money you can make for sure. And one way you do that is absolutely by networking with these folks that are already moving deals.
And nowadays, you guys run like you said, you guys run a RIA event now, or a real estate investment
Yeah,
association.
yeah.
What is it?
So it's it's a big networking. It's a networking get together. Last year, I think we threw 4 quarterly ones at a pretty big scale. So we had I'm not sure 400 to 600 people at those. They were fun. They're a pain in the butt though. They're 5 hours of speakers and vendors and all that stuff. So it's great for us. I would much rather go to that and like just talk to people than actually put it on myself. So that's why I say don't start out doing that. And then monthly we'll throw either a mixer that's a little bit more scaled down, a little more intimate, the people that are actually doing deals, and we'll charge maybe $25 for something like that. But we'll get people that are actually doing deals, and we'll get a good referral base. And then we started doing actually in our office, little in-office informal masterminds once every, I think it's actually I think we're doing that once a month now. And we'll get not even that many people, 20, 30 people, but we'll get wholesalers, we'll get people that are more interested in like actually having a conversation. So it's kind of 3 different levels that we do. I would say the cheapest and smallest ones that we do actually probably have the best outcome for us, at least in terms of like you can see one-on-one correlation, because we'll get, like I said, 20, 30 people hanging out in the room talking about, like, we'll be 100% honest. We'll talk about what's working and what's not working for us, and then how we can help people, and then we'll just go around the room and solve problems for folks. That's the best one. The next one that we do is we do the one we get maybe 100 people, 125 people, and it's more scaled down, more mixer oriented, with maybe like a quick presentation, something like that. But it's more like, drinks, cocktail, and pizza, and that's why we charge $25. And then the one that's really, we're kind of reevaluated is the big event, the 400 to 600 people event. And it's like barely controlled at best chaos. But we'll get speakers, we'll get presentations, we'll get lenders, we'll get sponsors. It's a pain in the butt. But go to that stuff and talk to other people doing deals. You'll be able to tell who's doing deals just from talking to a few people. The richest guy there is going to be in the back, just watching. So talk to that guy.
That's funny. What's funny, or what I really enjoyed, how you said that realtors only have like one exit strategy, which is to list it. And I think as even for realtors watching this, it's important that you guys learn different exit strategies. That way you can provide different solutions for the client. Because sometimes as real estate agents, we're already talking to the right people. And if you don't have different exit strategies, you're missing out on opportunities as well too, and you're leaving tons of money on the table. And like you're right, some people don't want to list. Like I remember being at a listing presentation where with a guy, and I told him I can get you 700 easy for this property. He's like, I don't want that. I just want an offer for 600,000 cash. I don't want that. I don't want to list it. I don't want anybody going through my home. I don't want that uncertainty. Literally, we made him the offer at 600,000. He took it. We sold it for 800,000, fixed up completely. But he
Absolutely.
didn't want that, So different people want different things, and if you don't have multiple solutions for them, you're going to miss out on different opportunities for them. So I think real estate, building relationships with realtors, that can get you some deals because a good portion of the deals goes on the MLS. There's still deals on the MLS. Wholesalers as well too. We've done several deals from wholesalers as well too, which I think is great and low cost as well too. They'll literally take care of all the marketing and send you just, hey, look, this is what you can buy it for. This is what you can resell it for. What about, like, we briefly covered direct mail. If somebody wanted to implement direct mail, does that even still work?
If you ask the mail houses, you just mail everyone in the city and eventually get a deal. So if you ask the people that know how to do it and know how to make it work, the way direct mail works is one of two types of ways. Either a long-term drip campaign, so it's almost like cold calling, but maybe a little bit better because it's a long-term drip campaign. So you're going to mail a presumed distress list. So again, I bring the biggest like presumed distress list out there, the absentee landlord high equity list. But you fine tune that, you narrow it down, and then you approach it from a campaign perspective. So one way that works well for people, for example, in our market, not to give away too many secrets, I guess, is like a long-term drip on a probate. Because why don't I want to call someone right after? It's a morbid situation, but unfortunately, we buy a lot of probate houses because dying is a natural process of life, and inherently, at least in our
They're
market, California might
distressed.
be a little bit different.
Oh, they're
Absolutely,
distressed.
they don't want to deal with it. They want to take out the memories, and they don't want to deal with the crap. And I get it because I would rather walk a burnout house or a hoarder house than a probate house because, like, man, it's kind of sad. They already took all the cool shit out of here, and all that's left is the stuff that wasn't worth their time to throw out. And we make money on that. So set up a mail campaign for a drip campaign for a probate list. And you can get probate lists from a lot of the big list providers, or you can get them directly from the county. But do a 12 to 18 to 24 month campaign on something like that with specific letters. And why is that? Because month one, every guy in the city is going to be mailing those guys, and we don't mail them out month one or month two because I'm not interested in competing with a line out the door to go talk to someone. I want to be the guy they call 6 months down the road, 9 months down the road, 12 months down the road, when they're out of the probate process, when they've dealt with some of the emotional trauma from the situation, and when they're really just looking for a solution to what remains of their problem because they've already dealt with the legal aspects of their problem. And then we can have a more rational conversation about taking care of the house, about buying it, about giving them a reasonable price, and then about, taking care of whatever issue they fundamentally have with the place. So that's a long-term kind of drip campaign. And fundamentally, every mail campaign, I think, is a long-term drip campaign that you have to either you're like geographically specific, so you're just going to mail all the houses in a certain area, and you're going to be known as the guy in that area, or you're going to, and however big you are is however big the area dictates, I guess, or you're going to pick some kind of list and treat it as a follow-up campaign. And I say that with a caveat is, for example, a lot of people mail out to pre-foreclosures. Well, if someone lost their house last Tuesday and you're mailing them out on Wednesday, you're not doing anyone any good. So you're just wasting money. So definitely consider what the lead source is you're trying to target and attack, and then optimize your campaign to adjust for that lead source, because each distressed seller is going to have a different distressing factor that caused the distress for them, and then adjust your approach to that respect. Not in a way to take advantage of sellers, because we're never there to do that, but we're there to optimize our
Solve their
solution for
problems.
what the seller actually needs. Absolutely.
Yeah. Good. What about social media? Like any tactics there, like Facebook groups, classified ads, anything like that?
Yeah, that stuff is so tacky, man. It's so tacky. It was so nauseating for me to post like a profit check from a wholesale back in the day. And the crazy thing is, the business just goes like that. Because again, I alluded to it. You get known as the guy that does that stuff, and it's going to depend a little bit on the market. But Facebook groups and the social media stuff is very active in North Texas. There tends to be some catcalling and infighting here and there among some of the guys out there doing it too. So you got to kind of stay as well as you can above that. But if you get known, even in your own like personal network, we bought houses for sure that were referrals from people that just know that we happen to be in business. We've gotten investors, friends of mine from college, that are seeing what we've done in North Texas. And again, from San Diego, I went to University of San Diego in Southern California. I've had investors that saw what we're doing out here in Dallas, like, hey, let me invest with you. Let me go fund one of your flips. Let me go get in on a rental with you. And so you don't really know what it is. Any brand building approach to marketing. So I think that's what that is. Billboards are brand building, social media posts are brand building, Twitter, Twitter's whatever, but Instagram is brand building. I bought houses off Instagram before. People hit me up because I share Instagram posts. So all that stuff is brand building, and it's time consuming and it's intensive, and it's a unknown payout in the back end. But if you do it well, it can do really well for your business for sure. But you got to be strategic about it. You got to be relatively non-offensive, but still memorable. So there's kind of a line that I think is a good way to walk. But it absolutely works very well. We actually just went viral on my business partner's, what's it called? TikTok. Probably 10 million combined views, where
Wow.
no kidding. We had a squatter break into a house that was already fully renovated. She broke the lock and walked in. One of the neighbors called us like the day of. So they go down there and go in the house and confront her and call the cops. Unfortunately, it was a little bit of a messed up situation. So she gets locked up, and they happen to record it. But at 10 million views, and even in Texas, we got a lot of all the comments were positive. Like, man, that's just a crappy situation. I thought we'd get some hate, but we didn't get a whole lot of hate. So that was kind of cool.
Yeah, that's awesome, man. Good for you. Not awesome that happened or that
Hey, it's part of the business.
but
It's the realities of real estate. It doesn't make it on HGTV.
well, it's funny because a lot of people think like, oh man, like I'm just gonna I'm gonna become a real estate investor, start making all this money. But there's a lot of things that go uh, uh, wrong when flipping houses or when buying properties or making offers. You have to deal with so many different personalities, so many different situations, so many different distress points. What I wanted to ask you, what about buying houses at foreclosure? Have you guys ever done that at all?
It's funny. I've been in real estate since 2006. I've never been to an auction. I've heard about them. I know folks that go. I've never been to one. So you know what I should have gone? I should have gone to the auction a whole bunch in about 2009 to about 2012 probably.
Yeah.
Right now, it's a great place to get buyers because if those guys are paying cash, I mean, we're at a market top. Let's be honest. I don't know if we're peaking or coming down a little bit, but we're high. So if people are buying at the auction, then A, they have cash, so you know that. But B, they're willing to, at least in this market, overpay for stuff because a lot of that is sight unseen. And so maybe that's where you find someone who wants to buy one of your wholesale deals or one of your wholesale deals or a private lender for one of your other deals. So that's a good strategy. Um, Auctions, I think, work well for buying really good deals, maybe a little bit lower in the market, in my opinion.
Yeah, no, I think you got to go fishing where the fish are. So, like, there was a time where there was a lot of foreclosures, and the time
Mhm.
was 2008, 2009. So there was an abundant number of houses going to auction. And right now, like at least in our area, foreclosures are down tremendously, even though they may go up in the future. But there's just not a lot of foreclosures as well, too. Cool.
So
Any
if I
other
could
lead
actually just really
sources?
quick, yeah, just
Uh-huh.
really quick on that actually, if I could just add to it. So we've got an uptick quite a bit. I would say probably 15 to 20% of our inbound leads right now are pre-foreclosure, which are going to show up on the foreclosure docket for foreclosures in Texas are once a month on Tuesdays, first Tuesday of the month. And very often we get a foreclosure in about a week to 2 weeks before the actual auction, and we can stop the foreclosure and buy the house. I would rather approach the buyer or approach the seller before they go to
Before.
auction instead of after they go to auction, because you're going to see on the list we stopped a foreclosure last this month, March, whatever we're in, the day before the foreclosure, that Monday. Well, the list is already posted. People have already gone, like driven by the house, looked at it. They've already done some due diligence. They haven't gotten into it, obviously, But we stopped it the day before, gave the sellers 50K in equity. It was awesome for them, but it's 50K more than they would have gotten if they waited one more day to close the thing. But if you're counting on buying that house at auction, well, I already got it. So I'd rather get the deal pre-auction than post-auction personally.
Not only that, but when you get it after auction, sometimes you're inheriting the previous owner, and that might not be the. Sometimes people do things in spite, so they may pour cement down the toilet or just do different things.
Yeah,
Um,
you do that, and you also inherit it. I mean, I think at least in California, but I think in Texas too, you inherit a tenant as reference basically, because the previous owner now becomes a tenant. So now you have to deal with an adversarial position where, hey, this jerk investor just bought my house, and yeah,
and
you
you're
can
kicking
knock
them
on the
out.
door, you can cash for keys, but now maybe you're in an eviction situation, and evictions can go, the outcome's always the same, but the process for getting there is different. It can go the easy way or the hard way, and I'd rather not do it either kind of way because they're never pleasant. So I'd rather give the seller some equity, maybe even give them a small lease back if they need some time to move out, and be in a favorable position with the seller as opposed to an adversarial position with the seller afterwards. I'd rather be a benefit to the seller than, let's be honest, all that an auction does is benefits the lender.
Love it. Now, anything else or any other tips if somebody wanted to find like an off-market property, or if they wanted to find flip houses or fixer-uppers, how to find fixer-upper homes off-market? Any other tips that you think would be helpful for people?
Pick one strategy. Pick one strategy. Figure out how to make it work for you. Make sure it's compatible for what your personality type is and what your skill set is, and then do it. And don't get on YouTube University and look at every single video on every single way. Don't get information overload or analysis paralysis or any of that stuff. Pick a strategy and just do it. And they all work, but they don't all work in all market cycles, and they don't all work in all markets. So pick one that work. You're not going to drop a bunch of bandit signs in well, what's the market everyone's going to know? In the most
Beverly
like,
Hills?
yeah, Beverly Hills. You're not going to get a lot of return rate on that, right? So pick the market where bandit signs are going to work if you're going to do that. Pick a list for cold calling, and then follow up diligently. Once you get a lead, follow up diligently with a lead, but always be originating on the lead source too, and that's how you start to build a pipeline and start to build up your volume.
I love it. Now, you said you had a Facebook group or a group that you manage. If somebody wanted to get in touch with you, or maybe I don't know if you have any coaching programs or anything like that. If somebody wanted to connect with you guys, what would be the best way for them to do that?
Oh no, absolutely, I appreciate that. So we actually run a mastermind and some coaching stuff, and it's pretty fun. So that's reiaf.com. I don't know what AF stands for, but REI is real estate investing, and that's where you can find us. But super active on social media. TJ Kozan on Instagram, TJ Kozan on Facebook. We have a REI AF Facebook group that's very public. It's not, it's active. And we keep it going. Shoot, you can find my personal cell phone number and call me if you want to. When we went viral on that video, my wife's actual cell phone number was on the realtor sign, so that was kind of weird. She got a bunch of junk calls that were pretty crazy there for a couple days. Like, what? That's weird. And then she found out what was happening. It's like, oh, that's what it is. So it happens.
That's funny. Cool. Well, I just want to say thank you, TJ. I think that this was helpful for a lot of the viewers. I appreciate, obviously, you coming on the show, and maybe in the future we can do another episode. For all of our viewers out there, we had TJ Kozan. He went over how to find flip houses, how to find fixer-upper homes, and basically just how to have multiple different marketing channels that you can have, and then just choose the one that obviously benefits you the most. If you've enjoyed this episode, make sure to hit that subscribe button. If you feel that this episode would be helpful, and you want to share it with a friend, make sure to hit that share button. Once again, thank you so much, and thank you, TJ, for being on the show. And to our viewers, until next time.